out of the meeting. So let me record this. Okay, so for market psychology, you want to be able to know why are you losing. And that's what I want to tell you in the shortest time that we have. A lot of persons are still not muted. I'm going to mute everybody. Okay, I think that's fine. All right. Most traders, as I said, are losers, but my challenge is that they are not consistent losers. If they are consistent losers, I will understand. So they end up losing their whole trading account in a single trade. One bad trade ends their trading account. Simply because they will not take small wins, they will not take small loss. They have so many things frustrating them. How do I mean by they are not consistent losers? If I have $100 account, for instance, and I'm losing $5 consistently per trade, I lose $5 per trade, I lose $5 per trade, I lose $5. That's a consistent loser, and he's on his way to becoming a better trader. But if sample B comes, first trade, he loses $5. Second trade, he loses $90. That's not consistency. This is the difference between a consistent loser and somebody who is also consistently profitable. Because you are doing it consistently. That's what I want to talk about today. You want to do it consistent. So you are making profit. Let it be consistent. Let it follow the same track. Someone chatted me up just this week and said, I'm not making profit. So I want to find out why he's not making profit. He's my friend. So I said, all right, send me your trading account. Send me the history. Only to discover where he was making profit. He was making $3, $5. Where he was losing $28, $30. That's not consistency. So if you are making profit $3, $5, if you are losing, you should be losing $1, $2 consistently. So it will take you a longer time to blow that account than it is when you are not consistent. So you want to follow a certain rule, a certain procedure, so that you can be consistent. Even if you are going to lose your trading account, guys, be consistent. If you are going to make profit, guys, be consistent. A lot of traders have too many strategies that frustrate them. They trade too many assets and they end up doing what we call a revenge kind of trading. They stack up positions once they are in profit. They now stack up positions. So once the trade goes against them, all the positions, 10, 20 positions, they open 5 positions, all go on red. That's not consistency. You've got to narrow it down. Get it? You've got to narrow it down. The more trades you concentrate on, the more trades you miss. That's the fact. The more trades, the more assets you concentrate on. Look, I'm going to be trading 3 pairs: EURUSD, JP, Euro JPY, Euro USD, USD card, and the more assets, NAS 100, US 30, the more assets you focus on, the more trades you will miss. Because while you are looking at asset B, asset A has given an entry. You are not there. While you are looking at asset C, asset B is giving another re-entry. You are not there. So this is why when we talk about trading the Forex market, I advocate for focus. Trade less, win more. You are here to make profit. You are not here to gather assets and gather experience and gather a lot of scars on your trading account or scars on your body. You are here to make profit. So stay on few assets as you've deemed fit. I'm not going to tell you. I can later, maybe while I progress, I can tell you what I do personally. A lot of persons go for revenge trading. Okay, I lost $10 this week, so next week I want to make $100. Then they revenge the market, open more than the position that is commensurate to the account size. They open double positions. they stack positions, you know, they don't take profit early, they have few assets running in profit or few positions rather, but they want to wait and say, okay, let it grow, there is no risk management in place, nothing is just following a set of rules. So today I'm going to tell you what to consider before hitting your buy button or hitting your sell button, what to consider. Let me just give you, let's say, 4 things before hitting your buy button and hitting your sell button. Number 1, you want to consider your risks to reward management. Let me put it like that, or let me write everything out. Your risks to reward. You must consider this. Your risk to reward ratio must be considered. Number 2, I'm going to explain. Let me type them out first. Then you must look at your strategy. What to consider. Strategy must be considered, or the rule you are going to observe. These are the things you must put in place. All right, let me just leave these two for now. Let me talk about these two. What to consider. Let me put it there. Okay. What to consider before you hit the buy and the sell button. This is what to consider. Please take notes before you ever hit the buy or the sell button on your MT5 or MT4. You must consider what is your risk and what is your strategy. What is your risk in this essence? Are you going to be risking 10 to make 30? That's a 1 to 3. Are you risking 20 to make 60? That's a 1 to 3. Are you risking 10 to make 10? That's a 1 to 1. Are you risking 10 to make 20? That's a 1 to 2. Are you risking 10 with the hope of making 50? That's a 1 to 5. So you must put that on your trading plan. It must be considered. You don't just wake up, oh, it's selling, and then you just go hit the sell icon. Or you just go jump in, oh, it's buying. The last candle was bullish. I said it over and over again in my videos. The candle doesn't tell you what happens in the market. There was a reason why the candle printed bullish candle. There was a reason why it printed bearish. So that the candle is bullish or bearish does not tell anything in the market. It doesn't tell anything. They are just retail ideas which we put together to at least help ourselves make some few cents. But that's not the reason why the candle is bullish. That's not the reason why the candle is bearish. So you want to consider what is your risk. I'm going to be telling you what I do, but you want to take a 1 to 1, a 1 to 2, 1 to 3, 1 to 4, 1 to 5, it's fine. So when you are taking that, this is what you're going to do. You're going to make sure you have, let's say, this is your buy position. This is what it means. If this is my buy position, just so you can see this. So you can see the risk to reward ratio here is 1 to 8. So if I have my stop loss here, and then I move this. So it means if I take my entry at this point, which is 1.12860, my stop loss will be at 1.1120. Then my profit, if it's 1 to 1, to be, I'm going to be taking profit at 1.14574. If it's 1 to 2, I'm going to be taking profit upward, let's say around 1.16. If it's 1 to 3, you want to keep going up until you have the risk reward appear, what you are risking versus your reward, you have it appear on this icon. This is the buy button. Now then, if you are selling, you also have it also appear in this form. The stop loss down this way, and then you want to take your profit down. You want to consider the risk. This is 1 to 4, as you can see on this chart. If I move it higher, 1 to 5, 1 to 6. So I'm risking $1, I'm making $6 from here. If I'm risking, let's say $2, I'm making like 8 or more. So this is the tool we use for your risk reward ratio. It helps you identify where your entry is, where your stop loss is, and where you should have your entry. It gives you everything you need to know. The tools are already on the site, so you just need to make use of the tools to be able to get accurate entry and exit. This ensure you consider. Then number two, your strategy. What's the rule? What's the rule? I want to say this, that it is strategy that should determine when you should buy. Does your strategy say buy? Does it say sell? You are not going to hit the sell button or the buy button simply because you want to make money. No. Your rule or the strategy should be the basis for trading. If you change the rules simply because you are in profit or you are in loss, you are just setting up yourself for destruction. You are setting up yourself for trouble. Don't change the rule because you're in profit. Don't change the rule because you are at a loss. So you are holding a position is at a loss. You already know that, oh, if this trade hits this place, it takes me out. Allow the trade to take you out. So buying, for instance, I'm buying, market has broken structure, so I want price to come here, activate me, and go this way. That's my plan. That's what I consider. So if price comes and take here, hit this stop loss, it takes me out. And then if it goes up, it gives me a 1 to 2. But price decide to come and move, have this movement, and then price came back from here. Instead of going up, it came and took me out. It doesn't mean that while price is now coming down this way, you quickly close your position and run away. Allow it to take you out. If it takes you out, then you want to find out, why did it take me out before going my way? Why did it take me out? Possibly there was a smart money cube or an order block, or there was something around this place that price came to play. So you want to find out. Then you document it and learn from it. This is how to trade. It's not you get an entry here, and while price is coming, you close and you run away. Then price is going again, you jump in. No. We don't trade like that. The strategy should be the reason why you take your trades. All right, let's go. Let me talk about the other 4 things that you need to do. First, know that trading is random. Trading is random. Number 1, trading is random. Take note of that. What I mean by trading is random is that you are not going to be able to tell what is happening. Never try to put a reason behind what you see on the chart. Simply play what the chart is showing you. Like I said, you don't need to know. You don't have to know, and you will not even know the reason. You don't need to know why it's buying. You don't have to know why it's buying, and it's not necessary. And you cannot know. You are not smart money. You are not the big guys. You are not the bank. So you don't even want to find out why is it buying. Simply play what you see on the chart. Simple. What does the chart present? So from what I'm seeing on the chart, I should be buying, you buy. From what I'm seeing on the chart, we are bearish. Then I'm looking for selling opportunities. Then number 2, develop an edge. Never forget this. Develop an edge. What I mean by an edge? You must have your skill, what you want to do. Some people, they trade smart money. Some trade support and resistance. Some take trend lines and all of that. But it doesn't matter what you are doing, what you are trading, just develop an edge. So if that edge plays out, I'm entering the market. If it doesn't play out, I'm staying off. Like we that trade smart money, we are going to be looking for when we have a trade like, okay, when price comes back and price goes out, and then those that trade let's say trend line. This is trend line traders, for instance. We don't do all that, but this trend line, let me go to 50 minutes, let me show you. Trend line traders will tell you that a trend is established at the second touch. Second touch. So third touch, they want to engage. So look at this. Price was bearish. Price came to the line, rejected, came back the second time. So this second touch, according to principle of trend line, is what establishes this trend line, that the trend line is valid. So they want to get an entry on this third touch. So price came to that third touch. At the touch, then stop loss at the highs, and then you are aiming to take price below to the last low created. And this gave you 1 to 5. Did it play out? The answer is yes. Will it play out another time? The answer is I don't know. But this is your edge. So you are playing what the chart shows you. First touch, second touch, a trend line is established. So you waited for this, price rejected, and you saw price came back and rejected. So you want to wait for the third touch to enter. And then it came. Is it going to play out at the next touch? I don't know. But what did you see? Price came here and played out. Now, as price came here and played out, look at it, third touch, you have the stop loss at this high. Then you want to take price from this low, this low. Did it get to the low? The answer is no. Are you going to know whether it's going to get to the low? You will not know. Do you need to know? You don't need to know. Do you have to know? You don't have to know. You are just playing your edge. That's what I mean when I say develop an edge. You stay there. Now let's go and see another trend line. Trend line traders. First touch makes a trend line. Second touch establishes the trend line. So at the third touch, you are going to be getting in. So you have your entry at this third touch, stop loss at this low. And price came and filled you in. Price filled you in, and now you're expecting to take price from this high. But did it cross the trend line? Yes, it did. But if you're having your stop loss here, you would have still been on this trade. But if you had your entry here, let's say you had your stop loss at this place, then price will come take you out, and possibly price will still go your way. Is price going to go your way? I don't know. You are simply playing your edge. So develop an edge. Then number 3, this is very important. You need to make a sample of your edge. Number 3, make a sample of your edge. Make a sample. Make a sample of your edge. Let me see, of your edge or the edge. Let me do like this, of your edge. Let's say e.g. about 10 to 20 samples. 10 or 20 samples. Yeah, I'm going to do like this. Okay, I'll explain. What I mean by make a sample of your edge is that you want to back test. So if you're a smart money trader, you want to back test. So let me remove all of this. Smart money traders will look at all of these highs taken away. Highs, this was the low that bettered this high. So we are going to be looking at smart money traders. You already see what you are seeing. We are looking at this imbalances here, telling you that price is going to come back. And there was another block. This was the break of structure to the upside. You see that break? Price closed above here. That was the break of structure there. Break of structure here, and then price broke this high. So long price has broken that high, as a smart money trader, you want to get in on the feel of the imbalance, since this is a lower time frame. So you have your entry, I'll play the feel of the imbalance, or you want to wait for another lower time frame. Smart money traders, then you want to wait for price to come here. So if you were playing this, you will be filled. You have already been filled, and then you want to wait for price to come here. Is price going to get to this high? I don't know. Is price going to get to this imbalance? Smart money traders know there's an imbalance here. You can see that wide imbalance that is there. So price can return from that place. So you want to take profit from here. That's a 1 to 3. Is price going to give you 1 to 3? I still don't know. All I'm doing is just I'm playing my edge. I'm playing my edge. That's what I'm doing. All right. Okay, I get it now. So you want to wait for your edge to play out. So if my edge plays out, I get in the game. If my edge didn't play out, I leave the game. So let me go to a 3 minutes. Let me tell you how I played this. I played this. I'm currently on this trade now as I'm speaking. I played it a few minutes ago. Let me show you how I played it. Okay, smart money traders. Price has come to the imbalance. So I was just simply waiting for price to give me another break of structure, which I saw around this place. Price gave that break, and then I was waiting for playing the open. So simply I play the open of that entry, my stop loss here, and this is where price is already. Price has given a 1 to 2 already. Price has given a 1 to 2. So what am I aiming for in my own trading plan and risk management? I go for 1 to 3. Once I get a 1 to 3, that's fine by me. 1 to 3. And you can see where price, that 1 to 3 should give you, let's say, the open of all this liquidity around here. You are just playing. Is it going to play out? I don't know, guys. I don't know, fams. I just want to play what I am seeing. So that's how to trade, develop and then back test it. What I mean, make a sample size of 10, back test that principle. If it's support and resistance, back test it and ensure you have like 20 to 10 or 20 sample size. Because not all resistance we hold, not all support and resistance we hold, not all institutional candle we hold, not all smart money Q we hold. It is not all other block that we hold. Price can break that other block. How do I know another block that we hold? I'm simply playing my edge. Are you getting it now? Meeting ends in 10 minutes. Okay, let's see what I can just cover up. Then number 4, let me say this, stay on course. Yes, you have to stay on course. Never be subjective in trading, jumping or hopping from one strategy to another. Stay on course. Stay on course. Stay on course. Stop hopping from one strategy to another. Trend line is making money. You jump to trend line. Support and resistance, you are playing it. Other block, you are playing it. No, stay on that edge you have developed. So long you have tested it and you're able to mark out 10 times in which it played out, stay on it. If you can make a 20 samples on your backtesting series and they played out, stay on it. If you take 10 to 20 trades using that strategy or that edge you have developed, and you discover that you were wrong many times, more than the times you were right, I will simply tell you to subscribe to another strategy. If you discover that after backtesting that strategy you think you know for 10 good times and you were wrong more, 20 times you were wrong more than you were right, that means you mark out the chart. After coming back so many days or so many hours, it didn't play out following the strategy. You mark again, it didn't play out. You mark again, it didn't play out. Please subscribe to another strategy. Get a mentor. Get another skill. Possibly I've been trading this, is not working. After 20 samples, get and just change the method. It simply means it's not working. Change it. It's an advice. Change it. And then lastly, build your trading plan. This is what I want to talk about now. I've talked about stay on course. Stop hopping from strategy to another strategy. Stay on course. If you are trading 2 assets, stay on the 2 assets. If you are trading 3, stay on 3. Don't want to trade 10 trades, 20 assets, different pairs and all of that, 20 pairs. No, stay. If it's 2, 3, 4, just stay there and ensure that they play out. Then you know if that edge is working or not. Lastly, as I speak about risk management, build your trading plan and determine your risks before taking a trade. So if I want to do a 1-to-1, a 1-to-2, 1-to-3, 1-to-4, 1-to-5, whichever way, just develop what you do. Like personally, I take a 1-to-3. When price goes to 1-to-2, some of the trades I'm not too sure of if it's a counter trend, 1 to 2, I take partials. I take 70% of my trade. And then I wait for whatever the market will be. So I break even on time and all of that. The typical trader is obsessed with the outcome of a trade, while the professional trader focuses on the process of trading, then allows the outcome to take care of themselves. So if you make up your mind rather to trade for any reason, use the skill you have acquired rather than just trying to make money. No. How much money are you making? Focus on the skill. Focus on the process. You will acquire more skills and you later find out that the outcome will just take care of themselves. Never count your losses as I'm rounding up. Never count your losses as a loss. Rather, count your losses as expenses for the year. Every business does expenses. Hello, every business. You're going to pay workers. You're going to buy fuel to run your generator. You're going to pay for rent. You're going to pay for stationaries and a lot of things. So count whatever losses you have right now. According to one of my friends, he said, take your losses as expenses, operational expenses. With that, it will not get to you. It will not get to your mind, so that you can have a clear mind to focus on the chart. And you must conquer your fear. If you don't conquer your fear in trading, just forget about trading. Conquer your fear. How do you conquer your fear? By staying on your edge, back test it, make a sample of it, stay on it, and you'll be able to decide whether it works or it does not work. And if it's not working, my advice, subscribe for a mentor. Now let's talk about risk management, the secret to consistent profitability and risk management. I'll give you 4 things. Number 1, know your risk per trade. You must know it. Never assume. So if you're going to be risking 3%, 2%, 5%, know it. Write it out. Document it. Personally, I don't risk more than 5% of my account. Never. So per trade, I don't risk more than 5% of my account. I don't. Number 2, you should know your maximum assets. The maximum asset or pairs will determine the maximum trades per week or per day. So if somebody asks me how many trades do you take per day, I don't even know. What I simply do is that I trade 3 assets on synthetic and I trade only 1 asset on currency pair. So if those 3 assets I trade on synthetic does not have any setup for the day, I don't trade for the day. If those 3 pairs does not have any setup for the week, I don't trade for the week, because I'm not trading the pairs. I'm trading my edge. I'm trading my setup. Hello, that's how to discipline yourself. So your pair, I trade EURUSD, for instance. I wanted trading JPP USD, but I've not really had time to, so I just focus on EURUSD now. So if there's no entry on EURUSD, I just need currency pair, come back to synthetic. If the 3 pairs I trade on synthetic does not have any setup, I just relax. I make videos. I have YouTube. I just go to YouTube and then I do something on the YouTube, or I just go out, just do something else. Or you stay on the chat and just watch what's happening. Use that time to develop yourself more. Number 3, you must know the maximum risk per trade in pips. Maximum 25 to 30 pips. Maximum risk per trade in pips, 25 to 30 pips. And then how do you calculate your stop loss? Let's see. Okay, look at this now. 25 to 30 pips. So you come here, the pips will be there. You come here, the pips will always be there, the stop loss. So how do you calculate what you are going to use here, your entry? Simple. What is your dollar? I'm risking $5. Divided by these pips. This is 2763. So if I'm risking $5, I'll just say $5 divided by the stop loss pips. The stop loss pips. It will give me the lot size to use on this asset. So if I'm using EURUSD, I will say the stop loss. Let's say I'm selling the stop loss pips, and I want to raise $10 on this trade. I'll do $10 divided by this stop loss pip. You see 0.0170. Then it will tell me the position I should open. Is it 0.02 I'm going to open, or 95 or 84, 0.01? You just simply do it. The dollar risk. I'm risking $20 on this trade. So $20 divided by this stop loss, it will give me the position I should open on my account. That being said, trading is not designed to be a win-win game. You must accept losses. Yes, you must come to terms with losses. There are going to be times where your entry will hit stop loss. There are going to be times you lose $1 or a penny, but you can lose $1 many times, 10 times, and still be in profit by simply applying risk management. Risk management is the only proven strategy for an account to grow and for you to remain in the game. Remember, I said be consistent. If you are losing, consistently lose. If you are making profit, consistently make profit. So I'm losing $5 per trade. $5, I risk it 3 times. If my trade hits stop loss 3 times, I will shut down and go and rest. Refresh. All right. So if I have 3 trades that hit stop loss, and I have 1 trade that went my way, and I'm risking 1 to 3, $5, and I made 1, which is $15, and I risk $5 and I lose 3, I end up losing $15. Where 1 trade gave me $15. That's the importance of risk management. My account is not affected. So if I lose 10 trades of $5, that will give me $50 risk loss on my account. But if I apply risk management and I make only 5 trades in profit, that's $15 in profit times 10, that's $150. So you see that by risk management, your account will still be growing even if you have any stop loss here. With this, I'll bring the class to a close. Thank